Welcome everyone to another Mwango Spaces. My name is Christopher Chege, Junior Analyst at Mwango Capital, and I will be co-hosting tonight. Today we'll be having a discussion on the AAR Family Medical Cover. We are here with the CEO, together with the Group Head of Distribution, James Kamau. They'll be here to break down the insurance cover, how it covers the healthcare needs, its affordability pressures, as well as the role of AR in innovation, product design, all together in the insurance space. Maybe to get us started, Justin, could you briefly introduce yourselves and tell us your roles about AR and tell us about your life journey as well as the business?
As you've said, my name is Justin Kuzgin. I'm the Group CEO, Air Insurance. We're present in Kenya and Uganda, and with some of operations in DRC and Rwanda and Tanzania. We are predominantly known as an health insurer. So we are a leading health insurer in Kenya, and of course, and by extension, East Africa. We have been in a journey of continuously improving our offerings to strengthen not just our position as our market leader in this space, but also as a go-to solution provider. Number one for health insurance, a flagship product where we are known for. And over the years, I think for the last, you can even recall 3 or 4 years, we have consistently either rolled out new products or refarmed or enhanced the products we have, that we remain alive to what is the changes that our customers are experiencing or what we see is evolving in the marketplace or the needs that customers need when it comes to health insurance and their health needs. And over and above that, we have rolled out other insurance products, including car insurance, home insurance, and business insurance, all kinds of insurances in the general insurance business class. So we still remain a leader in health insurance, but also slowly developing products for the other lines. And also rolled out solutions now, including strengthening our insurance business in Uganda. We're now a fully fledged insurance company there with bigger presence and partnerships in DRC to enable us offer services to clients up to that market. And on top of that, we have also provided international health insurance in partnership with an international health insurance provider called Cigna from the US to work a presence here. But with that, it ensures that we are able to provide insurance to anyone. If you need insurance that you can use in East Africa, you can, and also insurance that you can use globally anywhere in the world, we can also still provide by riding on partnerships. However, for today, we'll be talking about our newest product in the family, which is FAARmily Suite. Actually, it has an AR in the middle, so FAARmily Suite, which is basically a product to cater for the whole family from babies, and it's available then as a person transitions through life from being young to adulthood to when they're working, retiring, all the way. So it's just a product that is just reflective of the realities that we are witnessing in our country, generally in Africa, that we need products that transition through the phases of life. So that is it. I'll not talk so much about myself because today we are here to talk about the solutions that we have. Thank you.
Over to you, James, as well. You tell us about your role briefly at AAR and about the business as well.
Good evening, and thank you for having us in this forum. My name is James Kamau. I play the role of a group head of distribution at AAR Insurance. And this means that I interact a lot with our product and just the whole distribution channels where I relate with majorly agents, brokers, bank assurances, insurtechs, and even directly for those customers which is to relate with us directly. It's a very exciting role, just seeing how the revenues come into the organization, the number of people that we continue to cover every day, and the impact that medical insurance has every day on Kenyan families. It's a pleasure being here. Thank you.
Over to you, Justin. Given that AR has seen remarkable growth and transformation over the last few years, how does the launch of the unified AR family fit into your product strategy?
For us, FAARmily Suite is more than a product. I think what we have always seen is products in the market that are even us in our products being fragmented or split, yet they address the same family. So you have products we call unit for younger people, family product, then we have seniors, then maybe we have Shwari, we have a product that is budget friendly. But this product specifically built up upon what we have been doing. We've been growing, we've seen growth in customers and what customers have been able to enjoy in our solutions. But we've seen that there's a gap, and that gap is what has led us to this. So in terms of now shifting our strategy, now we serve our customers and understanding that families don't think in terms of separate insurance products. Think about protecting the people they love. So we reorganized our offering around now at the different life stages and put now all these products together. There will still be selections based on where you are within the product. So from juniors all the way to seniors, and therefore simplifies the customer journey while allowing families to grow with us throughout their lives. There's no need for dropping and switching between products, or you don't have to call for a specific product, but the product that addresses all the needs of the family. And that just aligns with our goal of growing along together with the family in providing a product that is very easy to understand and very easy to adopt. It ties very well with our strategy to grow. In essence, it's much simpler to enroll. And we've seen more customers enroll. We've seen a very big surge in how our partners and distributors are able to bring in customers, because customers are saying the product is much more clearer beyond, of course, the different age factors that are put in, but also the scope of cover is wider. It just speaks generally to the needs of the customers based on the market research that we did before rolling out the product. So in a way, it really matches our strategy and mirrors the needs that our customers are giving us.
I'm seeing Namsia has just come in. Namsia will be taking over as the host for the space.
Thank you, Justin and James, for the introduction and breaking down the product AAR as well as family suites. So I'll just continue from there because of time. And just like to hear from Justin as well, the gap that you actually identified and how it actually fits in the products for AAR insurance.
I just spoke actually just before that, but I'll quickly say something about that. One is we've observed some gaps. Maybe let me just summarize maybe 2 or 3. First one is that products that become fragmented, as I highlighted. So there are many products addressing the same kind of customers, so family from different angles. We thought that it's not efficient. And secondly, many families believed that quality medical insurance was beyond their reach. With this product, we've addressed pricing because we have various options within Family Suite, including budget products. And really what we're looking at affordability is ensuring that the product, the perceived value that you get is much, much more compared to the price you pay. So not just having low rates, but having a rate that, when you look at the value benefits that you're getting out of that, for example, including ways and checkups, which most products don't have in the market. But this product, all the options have a checkup. Then third, what I just said about wellness is that healthcare was in our products, and especially even for clients, is these products, insurance products, have been largely viewed as paying hospital bills rather than keeping them healthy as a family. Family Suite addresses this by first being easier to understand because it covers the whole family. You don't have to ask us for cover for seniors or for juniors or for a working class family. You just ask for family cover, and then offering options across the different budgets and placing much greater emphasis around now things like prevention and wellness. So we're moving away from just being focused on sickness and treatments to now focusing also on wellness.
Thank you, Justin. Now, James, Justin has just mentioned that it covers family. And here I believe that family includes everyone in the family, juniors, individuals, families. As a primary person who is taking the cover, how many people can one put as dependents on their cover?
Our covers allow as many dependents as there are. And the definition of a dependent would be one, a spouse, and then children. So as many as there could be, they are accommodated into the cover. There's a rate for just the increasing number of dependents. So it's very easy to calculate and just have everybody on cover. I know we have some unique scenarios where we have dependents, maybe probably one has more than one. And the work around that, we can be able to make applications appropriately. So our cover is open. You can bring in dependents if you have this number of children, not a problem. You can be able to onboard them without any issue. And above that, you have the choice of either choosing the benefits to be shared across the family or to have the benefits individually spread for each member of the family.
So this includes even children who are not biological children to you as the primary person taking the cover.
What you just introduced now requires a bit more of documentation. We can request an affidavit from you just to prove the relationship with the child. But we have the juniors cover, whose eligibility includes even adopted children. But that relationship is important to verify by just having that affidavit. And by the way, the juniors cover, you can even have children's home coming on board. And I keep emphasizing on the documentation because it has to be right. So I think we are all aware about the environment with which we currently operate. And you can find perhaps instances of something not going right, but documentation has to be right.
And maybe for people who may not be aware what kind of documentation, if you can just give us a list or the few documents or the most important documents that are needed for those people who probably have adopted kids and they are interested in putting them in this cover. What documents do they actually need?
As I've mentioned, one is the affidavit, and secondly, we need the PIN of the guardian and ID, just to attach it there, and a birth certificate. So with that and plus the application, then everything should move on smoothly during the application process.
Kenyan households and employers are increasingly responsible for supporting children, parents, extended families, and extended relatives. And amid rising health costs, economic pressure, and changing employment arrangements, as we have seen actually with this government, the economy is not as simple and easy for everyone. There is tough environment when it comes to the economy. Families are making trade-offs on healthcare. How are you as are ensuring that the comprehensive cover remains both accessible and sustainable to everyone who is also not up there per se, but anyone is able to actually have this cover from AAR?
What is out there? Most people don't see the value of insurance, especially health insurance. And when sicknesses happen or situations requiring payment of huge medical bills happen, we've seen that a big chunk is a lot of research that shows that a big chunk of families in Kenya have taken backwards economically, and they really get affected, and they go into very deep levels of poverty because of one medical bill to one of the usually key family members. And the risk of one significant hospital bill taking the family backwards is a big risk. So that's an education or awareness that we try and bring about, that is value in health insurance, because it's not expensive in terms of the annual premiums or periodic premiums that someone pays compared to the peace of mind that it brings and the protection it provides against those potential costs. And now what we have done is we have designed now our solution to address that, to ensure that people can have cover that they can afford. And one of the ways is with the options within the product that are affordable, in the sense that people can get very high limits, but at a lower premium. But of course, these trade-offs we've provided, the hospitals you get to use affordable hospitals within the regions out in, for example, outside of Nairobi, where we believe that care is still up to the level that is required at a much more affordable rate, and we've seen uptake. So we're not looking at, as I mentioned earlier, affordability as just being an issue of price, but being seen as the price you pay is delivering greater value. So in as much as we have provided flexible options within the product, embedded additional benefits, and invested in digital services, the product is available digitally, by the way, so making it easier and cheaper to distribute and reducing costs for the products, and that benefits the customer. So we have even including premium financing options where customers can get premium finance so that they can pay in installments. So we've done all that, but the key thing for us is customers to look at it from the point of that you get more value for the leading you pay, because the peace of mind and the value that it brings is much, much more and is worth it, protecting the health, of course, and the wealth of the customer. So we've thought through the options, flexible options. We've provided premium financing, and we've ensured that the value is much, much more because of the benefits, including the checkups and wellness, that ensures that someone is really well covered.
Thank you so much, Justin. And I like the fact that you mentioned wellness in there, and people look at value more than looking at the price that they pay when we want to about affordability, because this is limited public understanding of actually how policies are structured out here. So for how do you ensure that you're redefining the role to support the overall wellness of family? That's me as mentioned the word wellness a lot. So just like to hear from Jess, how are you ensuring that that's our wellness families?
In as far as wellness is concerned, we have various programs, and I'll give you two examples. One is that we have a wellness program for mine, where we take them through the maternity program right from the first month to childbirth. or just working with them step by step and just ensuring that everything is going to be well through the process. The second example I can be able to give you is for senior members of the society. They will be together in a group sharing experience. We also have a medication program where we source drugs which are commonly used by people with the different conditions at discounted prices, and we're able to dispense to them through some of our partners. So the issue of wellness is very important because you're able to manage various conditions proactively rather than waiting for things to happen and then you react. It's important because it saves money for the member and for the insurer in terms of the things that they're ultimately going to incur. So wellness is very important, a growing area in medical insurance, which we are very happy as AAR to be right there in the lead. Also want to mention that we work very closely with other various assistant partners such as the AAR healthcare who manage clinics and also the hospital. So we have negotiated packages for wellness which our members can pay on board.
Still on you, James, I would like to understand more. I'm sure the other listeners also would like to understand, especially you've mentioned about mothers' wellness, the senior. I believe senior here you mean people who are retirement age, senior retirement age. So I would just, when it comes to mothers, this is something I've also encountered, and most mothers go to check covers after they have conceived a child. Is this proper for a mother to take a cover before conceiving or after conceiving? And what can you advise on that? And then when it comes to senior, do you have an age limit of someone coming in for a cover as a senior?
Let me start with the maternity cover. The maternity cover is designed just to pay the bills around child delivery and the related conditions. What happens is that there's a waiting period in the first year and then subsequently it is covered. I know there's a lot of misunderstanding that happens there, but insurance will always pay for the unforeseen. So in the event that is an emergency, yes, the cover will pay for it. But now the normal childbirth, then there's that waiting period. On the issue of seniors, the senior cover members from the ages of 65 years and above, and it's a very comprehensive cover which has been designed. So in it, you'll find that you have the option to purchase outpatient. Inpatient, of course, is where everything begins. And the cover will pay for various conditions, including chronic and pre-existing conditions after starting healing. It also pays for hearing aids, walking aids, and other conditions that are related to the seniors. This is our fastest growing product, and it just shows that a market out there when you have a good product that meets the needs of the market. So yes, we are very happy to onboard seniors. And let me mention that we have a large group of seniors that we cover through one of the programs. So we are becoming specialists in covering seniors. We are understanding more and more as we collect the data. We are supporting them a lot. And I can relate this to a client who I served yesterday. And it was interesting hearing the common challenges faced by seniors and the fears there. The high medical costs are a reality today, and being proactive around coverage of our parents or our grandparents is very important because anything can happen, and yet we want to give them quality access to health. So very important, and to cover that, I would recommend for FAARmily.
I'll still with you, James. The junior pillar and then the adult covers. Now, with juniors here, we have the 17-year-olds who are probably finishing high school. And then you have those ones who are 25 years old, probably finishing college and campuses. How do you transition the junior cover into adult covers seamlessly?
Justine had mentioned that our intention is to cover you across all ages, all generations. Assuming that you have a junior cover with us and you have attained the age of 17, but you're still in school, so we allow you to progress all the way as long as there's been proof that you're in school or in college until the age of 25. At the age of 25, what will happen is that you will receive a renewal notice that will now give you a summary of the new benefit, now adult cover, so to speak. So the transition is very seamless. It's very smooth. We have all the platform that you can be able to use digitally. We have very professional intermediaries who can be able to guide you through if necessary. But it's very straightforward because a renewal notice will come to you, and all you need to do is sign that those are the benefits that you need, and they just pay the premium, and then cover continues. And there's no waiting period because you will already have been on cover for that number of years. So quite smooth, so to speak.
I think it's important to highlight that what James has said, the product is one, but there are in between things like those, this is a junior person, this is now an adult, just a smooth transition within the product. And that's the whole essence of now the family suite. I think that maybe for us is really that solving that friction that customers were having, and also the fragmentation that you have to request for different products for senior people, for junior, and the different categories of customers.
Let's take a good lesson for our minutes now. We have the inflation now at 6.7 straight. And we are talking here of wellness and taking care of people and going for the value of money and not just looking for the price. But we have inflation coming in, we have regulatory shifts, and then we also have emerging health risks. We are having different types of diseases emerging, and how are future-proofing its model for households.
For sure, the environment that we operate in is changing. Not just, you've highlighted really important things that are changing, inflation as one of them. The climate risks even that are happening. There's even new diseases that are coming in and regulatory changes. So we are highly regulated, for example, as an insurance company or insurance industry. So we are required to have different levels of compliance, whether it comes to capital, how much money we should have, the technology that we should have in place, the people that we have, the level of qualifications, cyber risk are here. So there's so many changes. But we believe that we have the right ways to address those challenges while delivering health insurance that is still relevant, doesn't lose value. So what we do is we have invested heavily in technology. So we are an insurance company that has invested heavily in technology. We use MTBA, which is very efficient for us in managing claims from the provider side all the way from when client accesses service up to the time we pay. We also use the data and analytics to really track, to analyze trends that we see so we don't get surprised by the changes, either in costs, inflation, customer behavior, diseases, customer needs, and things like that. So we have teams that do data analytics and provide us with information for decision making. We have also adopted AI so that we reduce costs. So more than 70% of our claims auto-dedicated. And over and above all this, we have strong provider partnerships and ecosystem collaborations that ensure that we talk, and therefore we manage costs for the benefit of the customer. So in as much as inflation is there, for example, we're able to negotiate better rates for our customers. So if you look at our averages for the last, for example, 3 years, they almost remained flat because of that and negotiations that we have in collaborations with our partners. And then again, within the family insurance family, we have clinics that we own, healthcare clinics and hospitals, so that we also have a better terms for our clients. So encouraging our customers to use them so that they can manage also their cost. So we continuously review this, and also review our products so that they remain relevant to our customer needs as they evolve. And that's why you see every year, this is what we have done. Almost every year we have to review the benefits so that we don't become inadequate for customers. And on top of this, now AI has come in and is helping transform other areas such as customer service, claims, analytics, fraud detection and prevention. Because when we reduce wastage, that is our benefit to our customers. So there's a lot of activity happening to manage costs so that we don't increase prices or we don't deplete benefits of our customers. And overall, then it makes the coverage that we provide sustainable, even though we keep enhancing or resizing that on a yearly basis.
You mentioned data, you mentioned AI. That's conversation that everyone is having with German space there in. And I think we also need to address the issue of non-traditional families and people in diaspora and who are increasing as well. Family structures have also evolved significantly. How have you designed the switch to accommodate this type of families, the non-traditional families and also people from diaspora?
Indeed, families have changed a lot. We've seen that. We see single parents taking care with their kids, and then grandparents raising children or grandchildren, and then group of guardians, the way you've asked before, and then blended families and Kenyans outside the country paying for health insurance back home or health or medical bills. So we have evolved also. We have seen that we have to evolve of how we do this alongside this evolution, how the society is evolving. And when we design families with most of the products, we have made sure that they are flexible enough to accommodate this rather than forcing customers. So what we have done for the diaspora, we have partners that enable people in the diaspora to buy insurance products for people back home. We have partnered with, everybody knows about people like Jams Media and other agencies that are operating outside the country. And that enables the diaspora to do that. Then for locally, as we highlighted, this product, anybody can buy insurance for the other person. So current parents can pay for their grandchildren as the guardians also, and single parents are taken care of. So the product is flexible enough to accommodate. So we don't want to force people into believing that they're being put into forest and accommodated what a family is defined as. And as James has mentioned earlier, all we need is just documentation for proof of taking care of kids and the relationship between people, and the product is able to accommodate that.
Now, I'll move to you, James, and we have the travel insurance and personal accident covers, which are embedded in the family plan. How do you translate this to real value for families as we look at cost and needs, which continue to change? How do you ensure the covers remain responsive and things like insurance and personal accident cover to be translated as value for families?
Besides the medical risk that we cover within the medical insurance, we also realize that the family in this evolving environment, there are so many things that happen. And one of them is that there is a lot of traveling and people need coverage whenever they are traveling. But there are a number of things that can happen during travel. One of them, you can actually lose your baggage, and our cover will be able to compensate that. There is the element of delays or other similar things where you find perhaps for various reasons, a flight was delayed by a day or two, and that compensation needs to happen. However, you can also be covered for medical emergencies using the travel insurance. So what we are trying to do here is to just get into our daily lives and have insurance working with us as we do our daily activities. On the issue of the personal accident, this is really a cash payer when things happen. Death can happen, and the next of kin can just give them some benefit to get them just up again in life. There is also the permanent disability that can happen. An accident can happen and you find yourself unable to use some of your limbs. So a cash compensation is done. And yes, these kind of benefits are very important to be embedded in the medical insurance cover, which we are currently doing at no additional cost, just to be able to introduce some of these products to our customers. I must say that this is working very well. Even just moving outside a bit. We also have SME covers and what have you, and it seems to be popular with the business community. But the family, yes, we are getting more and more sophisticated. We are traveling more. We are living more, for example. And it's important for us to be able to cover the inherent risks.
I want to take us back to the seniors cover and just to respect this one. You mentioned before that you've been now handling seniors and discovering probably how you're handling them more differently. How does the seniors care address the realities of aging, given the chronic conditions that most elderly people actually encounter, that is still care needs? How does the senior care address these realities? And still on that senior care, it includes the fixed core payment and lifetime renewability. How do these two features protect families from cost shocks over time for the seniors and for the family entirely?
The seniors cover has quite a number of benefits which are useful to the beneficiary. Let me highlight outpatient. As we age, you find yourself being more frequent than before. You're doing hospital visits, consultations. Various conditions may start kicking, blood pressure and other chronic and pre-existing conditions. So our cover allows you to access services so that you're able to deal with those conditions. So it makes a very big difference in the lives of our family when those conditions are covered. The interesting question you asked about co-payment. Co-payment is the fact that you'll be able to go to hospital and make a payment, even as insurance, and meet the bigger cost. That is important because one of the things that comes out of there is that you're able to control your benefits. For example, in the big hospital, so to speak, if there is a co-payment, say, of 2,000 shillings, the message there is that you really need to go to that hospital. And if you need to, then there's that cost for you to pay. And you are encouraged to go to another hospital, maybe with a nil or minimal copay, so that your benefits can be able to be extended. So both ways, the insurers, the claims ratio remains manageable, and for you, the user, your benefit will last longer. At the end of the day, your premiums remain stable, just minor adjustments relating to inflation perhaps. Otherwise, it's a very important way of controlling costs, managing benefit, and ultimately just keeping the process stable.
And we mostly encounter seniors getting rejected a lot from medical cover. Anything you're doing to help them? Because most of them actually shy away, or they don't actually believe there's a comprehensive cover for them, or for lack of a better name. How are you helping the seniors to actually come and take up this cover?
One of the things that, of course, we are doing marketing a lot, trying to reach out to groups in churches, the families, to concept. So we are reaching out to the people. We are doing a lot of training for our intermediaries, go out there. And yes, we can see a huge increase in the number of seniors that we are covering. But the bigger thing is that we are paying out claims. They're experiencing that insurance is indeed real. So we continue to have referral. The product design, again, is also adequate and suitable for the seniors. We've removed a lot of issues that made access to insurance difficult. So all the way up to life, we can be able to provide a solution. Through our senior care product, you can go all the way to 100. You can keep on renewing as long as you are on cover. We have increased our entry age, and you can do that even at age 80. So there are so many things that have changed around the product design, and there are also packages which the hospitals continue to design to make the seniors' healthcare experience more suitable and better. And it's no wonder that we are seeing our seniors as continuing to live even longer. Maybe just to complement your question, it's time now through such platforms like Mwango Spaces, we reach out to members of the society, including people in the diaspora, to remember the senior members of the society, be it their parents, their grandparents, yet provide cover because that gives them a lot of dignity. They are able to manage their healthcare needs in a very decent way.
Happy that you've actually mentioned the diaspora, because I was going to ask you my next question. As a diaspora person, you're saying that they can take care of their elderly parents as they are in the diaspora. Most of the time, we used to explain that people in diaspora would be needed to be back in the country, carry out some of these things, or to be onboarded on some of these products. It can take us through the practical bit of someone approaching AAR from diaspora and they want to take a cover for their family. How do they do that?
Thanks to technology, when you just visit our website and you will find the option to buy online, and immediately you can start the buying process, including the payment premiums. However, the member back home may need to probably go through an introductory medical examination. So just collaborate with our offices, trigger the buying process to buy online option. We from there shall correspond, and we shall be able to get the person who is being covered accordingly. It's quite easy actually. We have the quickest buy online option when compared to the other available option. It's quite easy to purchase a medical cover today from the diaspora. I've also seen instances of intermediaries are now reaching either the diaspora. They are periodically going, meeting the diaspora market bank. We do a lot of work with them, and we have those diaspora connection. The CEO mentioned that we have a partnership with Chance Media, who are quite a big brand, great orders. And what Chance has done, they have gone ahead and started Chance Insurance Agency today. So when you're interacting with Chance Media, you can consume all their products, including insurance now. So there are various ways that you can be able to get access to medical insurance through AAR.
Still on you, James, unfortunately, you'll have to speak more on this. From your experience as head of distribution at AAR, what are the feedbacks you're hearing most often from families are using AAR covers?
Good question. 3 touch points come to mind. And the first feedback that is quite frequent is affordability. And yes, medical insurance, you can consider it not really. I don't want to use the word cheap, but it's a bit expensive. And what we can do is just to learn how to blend the available products in the market. One of the things that we encourage members of the society to do is to take the government medical scheme and use it as a primary medical cover, and then supplement with the AAR medical cover. Once you have the two of them, then life becomes bearable. So the issue of affordability is a lot. The other, I think Justin alluded to it, because now how do I pay? As the installment available? Yes, there are, but we still need to make it more and more convenient and affordable. The second thing that I hear quite a lot is about service. And the service now, especially in the hospitals, you'll hear people talking about long waiting time. But what we have done on ourselves is that through the use of technology, our technology partner in Tiba, we provide an end-to-end flawless process that ensures that you get the services that you need within the shortest possible time.
We almost winding up, and business of filling out the experience that AAR has had with their customers and the feedback they have so far gotten from their customers. Which most of it was positive, and I can't see him here with us. But just to wind up, Justin can tell us in 5 to 10 years, how do you see family medical cover evolving in the country?
We believe there will be serious evolution based on what we have seen the last few years. That health insurance, especially in Kenya, would become far more preventative. It will be very digitized and also personalized in that process. And that there will be, as I mentioned earlier about having various partners, that there will be an ecosystem where you can access various parts of your healthcare. The insurance company, such as they are providing you with coverage, but also having partnered with not just hospitals and clinics, but also other partners like banks to use your information to offer you better services, other wellness providers such as healthy food providers, gyms, wellness, physical activities, in travel companies, airlines, and many other partners that geared towards the overall well-being of an individual. That's how we look at it. As we move forward, we're going to see more of an ecosystem-driven approach. So our vision, for example, as there is not to simply be an insurer that pays claims, but also become more of a lifelong health partner where Kenyan families can really believe in and tie up their life journeys with. And so our success, we intend to measure it by way of how healthy families are, with better healthcare experiences and better financial protection across every stage of the life, and not just providing insurance policies, but looking at people. Also ties up with our vision, as our vision is to protect the health and wealth of people. Generate their wealth, we protect it and be there to see and support people achieve the best potential and provide that peace of mind so that happens. And thank you.
Thank you so much, Justin. We've heard it about protecting the health and wealth and going digital. Now, Jen, maybe you can just give us a parting shot. And as you give us a parting shot, also tell us, how does someone reach out to AAR? Where can they find you? If they're interested in your products, someone in Diaspora, you can just go over that a little bit as we wind up.
My parting shot to encourage each one of us to actually get an insurance cover. I know many people may say it's expensive, but I would also like to say it's more expensive to have, say, a medical insurance cover, because we are always reminded that we are one sickness away from poverty. In terms of reaching through to AAR, you can reach through our website, www.aar.co.ke. We are on other various platforms, Instagram, Facebook. So we are very easy to reach. We have 12 branches across the country. That's in Malindi, Mombasa, Meru, Thika, here in Nairobi, Naivasha, Nakuru, Eldoret, Kakamega, Kisumu. So they are very available. We also have that regional presence. We are other East African countries. So we invite you, please get in touch, and we promise to get back to you as quickly as possible.
Thank you so much, James. James tells us get that cover because it's still expensive not to have one, and I think all of us understand what that actually means. Health has become so expensive. So you can reach us to AAR and get information on their website www.aar.co.ke, on their various platforms on Instagram, on Facebook. You will be helped, and they have 12 branches all over the country. Thank you so much, Zati and James, for gracing our spaces today, and have a lovely evening for everyone.